Hi, my name is Mikey. This is Tyler. We're the founders of Innovator Start Organization, also known as ISO, and our goal is to teach financial literacy. And in today's episode, we are going to talk about some of the Fed rate cuts, what that means, its impact, and then also talk about some fun things about the holidays as far as financial literacy goes. We're trying to make this a quick episode just to make sure that we get on topic as far as like the Fed cut stuff. Obviously, we talked about this in previous videos. You can go and watch those on our channel. Essentially, just going over what does it mean, how much it was cut by. Sometimes they use basis points, but some of the same thing as far as like the percentage goes. So the Fed cut the federal funds rate by 25 basis points. Again, we have previous videos where we talk about what the basis points mean, but essentially, that's just used to stimulate the economy. So whenever there is a cut, you're essentially just looking to stimulate growth with those cuts. The interest rates, when you see a cut, is usually because there's an economic factor that looks like a downturn. So whenever you see it raises, usually that's coincides with the economy doing a little bit better. So always check on those. Those announcements come quarterly. There's been a cut for I think every quarter, right, Tyler? I'm pretty sure, yeah. Um, which to stimulate growth, right? If you continue to cut, obviously not a good thing. That means that there's some economic trouble there. But again, we always like to inform, so we want you guys to go ahead and try to look into that and see what that means for you. But also check out, like I said, our other episodes where we explain some of those things and we talked about the Fed rate cuts in previous quarters. Essentially, what you're looking at whenever there's a Fed rate cut, just to kind of reiterate, you're looking at credit card APRs, and then you're looking at some of those high yield savings accounts. I think that's probably the most important one because if you do have a high yield savings account, right? And those rates that go to it is what makes you money, right? And if the interest is lower, then you're making less money on those money sitting in those savings accounts. A lot of the times when it comes to auto loan rates and everything else, um, those is usually try to, like I said, stimulate the economy. So obviously offering you a lower interest rate so that you can make those type of purchases when it comes to like financing things. But essentially, like I said, whenever you see interest rate cut, it's usually to try to stimulate the economy in that sense. And then obviously vice versa to an extent. Anything you want to add on to that, Tyler, as far as those goes?
Yeah, I would say there's definitely different viewpoints on where things are at right now. A good word to look up is stagflation as well. There's some people that, some economic, economics,
Hmm.
economists, sorry, good grief, that think that we're in a stagflationary period. So, is really interesting. And with the government shutdown this year and the job numbers and things like that, that also does affect the Fed rate cuts and opinions that are going on. And I think we mentioned this before, but normally the Federal Reserve tries to stay independent of the current presidential administration, even though there is a Federal Reserve president that is up for nomination next year. So the current administration has been pretty loud about what they want and where they think rates should be, but there's always give and take in that. So uh, another few things for you all to research is the interest rates around the world as well, how that plays into a role of the financing in the United States. Um, I think Japan just raised their interest rates, which is a really big deal for them and their economy. So these all factor in to each other. It is very, very interesting to say the least.
Yeah. So just to kind of close out on what Tyler is saying. So essentially, the Fed chair position, obviously the main person. Obviously, there's a lot of figureheads in the Federal Reserve. Um, I forgot how long their terms are, but they're supposed to serve unbiased. Same way like the Supreme Court is, even though that's not really the same because you have administrations. I'm pretty sure the president appoints, right? Which is interesting
Yeah, they
considering,
nominate and
yeah,
then
which is interesting because they're supposed to be separate of government entities. So it's I guess, a fine line for all of that. And Tyler and I have also discussed in previous episodes kind of like how the Federal Reserve was started or how it began. But if you want to look into the history of that, you can check that out in one of our prior episodes, or you can also just do a quick Google search on just, the creation of the Federal Reserve. Again, it's not supposed to be anything that's government tied. They usually just work on economic impact, essentially. And again, when interest rates are higher or they raise interest rates, that means the economy is doing better because essentially when you're raising interest rates, right? If we're looking at those things like high yield savings accounts, credit card APRs, all those things, right? That's stuff that's charged towards the consumer. So in that sense, if you want to look at it from a a high level look, you're basically saying like, hey, these consumers have more money in their pocket to be able to afford these higher interest rates, essentially. So we're looking at the opposite because there's been three cuts this year so far. So trying to get some type of stimulation within the economy as far as consumers go. One quick thing as we jump into the next topic is we want to just throw out some fun facts. But one of the things that Tyler and I had saw as far as like this previous Black Friday shopping had came out that the this is one of the highest, I guess, consumer spending Black Fridays, probably I think in like a long time or just period. But what also came out is that a lot of it was financed shopping. So when you look at what that means, essentially everybody bought a buy now, pay later on their goods. So whether that was Christmas presents or whatever that looks like, it was all put in that buy now, pay later. One interesting thing I also saw is that um, a lot of the people who use those have really good credit rates. And what those companies do is charge no interest, which is also interesting because it basically just allows you to separate your payments, but at no cost if you have a good credit score. And I don't know how they make money essentially on that because there's no interest charge there. But for the people who can't necessarily afford or have lower credit scores, higher at risk of defaulting, they're charged interest rates and they're charged the highest interest rates, which doesn't make sense because if they can't afford it, then they're not. Um, and some people might be like, maybe they should flip it, right? If they have a good credit score, they'll be able to pay it off. Why not just charge them a little bit of interest? You can make money that way. Obviously, they're trying to reward people with better credit, but at the same time, companies like that who do debt financing or buy now, pay later, who knows what their revenue model is? And I'm sure people, ask them that all the time, their exec suite or whatever. But that's just food for thought as we jump into some of these holiday fun facts. So the first one I have on here is boomers now plan to spend 858 on gifts, which is up from $671. One thing I would like to look at this, and then it also says that millennials dialed back from 921 to 843. Boomers are essentially like grandparents. Anybody, I think, what that'd be like above 50 plus around that age. Millennials being people born in like, I think it's like the 80s. That might be pushing Gen X, but it's like late 80s, 90s, early 90s in that sense. So a lot of parents now, and people a little bit older than us. But yes, one thing I would like to see is, um, w- what might be the reason for that. I think a lot of the times when people look at like, when it comes to generational spending, obviously, if you're a grandparent, you have a lot of grandkids, you're probably going to spend a lot more money versus if you're a parent and you have, one or, two children versus your grandparents having, four or five grandkids they need to spend for. That could be the case, but that's just an interesting thing there. And then another thing on that too is Gen Z jumped from 586 to $622, saying that they're stretching budgets. I think that's an interesting term. So, in reality, you probably think like, I think there's probably more to it as far as like these spending habits and how much is being spent. Again, go back to what I just said earlier as far as like debt financing. I'm pretty sure Gen Z and millennials are probably the higher usage of those debt financing versus like some of the older generations. But those are just some interesting things there. Any comments on that, Tyler?
Yeah, I just think it's interesting that the consumer stretching is an interesting term, and I think that's very individual. Like, what does that mean for some? I think it's different for everyone. So, yeah, it's definitely interesting. I'm curious how these buy now pay later, how long these will be around, or how much they're getting some criticism, some
Hmm.
heat publicly. So that will be interesting, and it's. I will be curious to see with our previous conversation with interest rates decreasing, the economy starts to get some more steam going. If buy now pay later will continue, or how that will play a role. But
Yeah.
anyway, it is very interesting. I'm not surprised though that some of the younger generations scaled back a little bit. I mean, we know this, like boomers have, more disposable income for being
Hmm.
retired and
Yeah.
things
It's
like
also
that.
it's also interesting too because um, with that uptick in spending for boomers, but it's also been in question for a lot of those people at retirement age if they'll have enough money, considering inflation and everything else as far as like just cost. Uh, if they'll have enough money once they do retire, like right if they saved up enough. And in reality, right, they'll have their social security, they'll have hopefully if they did have retirement savings, they'll have that start getting paid out. So the reality about retirement is that you don't really know, how much longer you have after that, right? 65 is probably like the age right there. So and then I get the average lifespan is either 76 or 77 in the US. So really, you're like, oh, maybe I got 10 more years, maybe you got 20 more years, right? I think the goal is if you're saving, is to, save as much as possible. No need to go for the minimum or have like a small goal, like you want to exceed that goal. Because at the end of the day, if you don't make it that long, you can have that in your estate planning as far as donations or, giving that to your children, grandchildren, right? But it's better than, you hit 78, you're like, okay, I don't have any more money to spend because this is how I budgeted. So, um, who am I to tell, older people what to do with their money? But if you are somebody that's planning now, right, as a young 20-year-old getting into the workforce, by all means, look to exceed, whatever your goal is for retirement. You're probably not thinking about that now because that's 40, 50 years, you know, out the way. So, but when you get there, it becomes serious. I think it doesn't really cross people's minds until they start thinking about, being an adult. I think like really like 25 is when it probably crosses your mind. 26, if it gets to that point. I mean, Tyler and I have friends who are like way past that point, the married kids, house, um, way before that age. So it really just depends. But I would say, in my personal opinion, like you feel younger until you don't, until you get around people who are younger than you, and then you're like, oh, wait a minute, I'm starting to age up a little bit. So that's just a little side note there. But getting to our next fun fact, gift cards. Um, I think an interesting fact about gift cards, one, is companies make a lot off of gift cards because a lot of people do not spend the money. So do you know all those people who get, gift cards for presents and gift cards for, birthdays and, holiday parties or whatever it is. A lot of the times they just send in people's wallets or whatnot, but that's money already spent to the company and they're expecting you not to redeem that, right? Because in reality, the cost of you buying that is probably not the cost of the materials for them to give you whatever it is, right? So they're kind of it's a good little scheme, in a sense for those companies because, right, you get a $25 gift card to Starbucks, right? All the ingredients that go into that Starbucks probably doesn't cost the same amount, and you probably won't use it unless you're like a Starbucks, you know, aficionado, or you go there and that's your thing. Same with any other gift card, but uh, going into that, over 50% of holiday budgets go to gift cards, right? It's the go-to. I don't know what they want, so let me just get them a gift card to somewhere that I feel like they might shop. Now, the caveat to that is that if you don't know what they want, you don't know where they shop, they're not gonna use the gift card. So right, because if I just walk up to some adult and I'm like, yeah, I heard you got some projects. Here's a or Lowe's or like Home Depot, gift card, expecting for you to have some type of projects you need down the line. Maybe or maybe not, you might not use it. So that's just free money to them. And if you lose a card or whatever, it just sits in your wallet for, 10 years, 5 years, a year, right? That's money that they get to go ahead and keep in their wallets there. But that's an interesting thing. Anything on gift cards? I feel like I get gift cards and they low key do sit in my wallet. I'm not gonna lie. I think it's like the Visa gift cards are probably best because I can just spend that everywhere. But like store specific gift cards are it's tough, especially if it's like if it's a nice gesture, but I do not go to that store at all. Yeah. Starbucks gift cards, I just give those. So I'm like, yeah, I don't go to Starbucks, but here you go. I just basically second hand the gift. But yeah,
No, it's interesting. Like, I'm big on physical gifts. I think, gift cards are easier, obviously. I don't know. But it is about this topic though. It is what is interesting is the amount of like interest that some companies will make off gift cards. Like, if I bought you a Starbucks gift card and you don't use it, that $10 is staying on Starbucks' balance sheet, and they probably have it in a high yields. Most companies will have that in a high yield savings account, so they're just continuing to make money and money, and some people. There's actually an older article that some people were like, yeah, Starbucks is actually a bank because how much money they have and just sitting in cash from unused gift cards that are just racking up interest. That's essentially, the interest they make is free money to the
hmm
company. Um, so it is really interesting.
yeah. I feel like even if you're somebody that gets like Starbucks on a daily basis, because some people even load up their accounts, right, with money in there and it
Oh
sits.
yeah, that's right. I forgot. Yeah, yeah.
So it's so interesting how that is works for those companies, but I'm sure that goes into like an accounts payable essentially, but they also get cash. So whatever they want to do with that cash, whether it be reinvesting it or whatever else, um, they can have, moments to make more money on that money that's given. Same way a bank does, essentially, like Tyler, you were just saying. But whenever you deposit money into a bank, and one of the biggest things why banks have to be FDIC insured. So, whenever you deposit money into a bank, right, they loan your money out. Anybody that needs a home loan, anybody that needs that, they want to do their own investments, they loan your money out. They don't have to keep a certain amount of cash on hand in case. But other than that, that money you put in there goes right back out. So um, that's one of the biggest things that caused the last, I guess, recession. But if you want to look more into that as a huge thing, a lot of banks got bailed out. Go and look into that. It's a big story. If you've was it The Big Short? You can also go look at that movie too. It gives you kind of like a more action thriller kind of side of boring topic. But going into our next topic here, AI and social media powered gift discovery. So it looks like 51% of Gen Z and 38% of millennials are turning to AI powered tools to get gift ideas. I feel like what all that just said to me was somebody going to chat GPT and saying, hey, what should I get somebody, that likes cars or something like that? Which is interesting because I feel like why can't you just message a person? But I get if you want to be anonymous, I guess. But as an adult, if a gift is coming from somebody, like it's not like I'm waiting on Santa. So, but
So,
yeah,
I
it's
mean,
interesting.
I did it like I did that for my dad. Like, what do I get? What do I get my dad? Like, I mean, he has clothes. Like, what are gift ideas for a grill or like new grill accessories or
Mhm.
whatever. So
Yeah. Sometimes I just try to like play it by ear. So I'm like, oh, like if somebody's like, man, I wish I really like did it or had that or because I feel like it gets to a point where somebody might have a lot of stuff and you're like, I don't know. Like for myself, somebody's like, oh, like what do you want? And I'm like, I don't really need anything. Like I'm good. I was joking with my sister because she said, "Oh, like, do you want anything?" And I said, "If you have $1 million, like, yeah, I'll take that." I was like, "If you're about to rob a bank and you get extra cash, then by all means, but I don't really need anything or in that sense. But yeah, cash is king. So if you got it, hey, some gold bars or something, I'm by all means. Other than that, I'm good. But yeah,
And some silver coins with how much it's gone
s-
up this year.
yeah. Hey, I got me a little piece
That's
of piece of silver sitting in my closet right now. Somebody was just talking about that too. When I was working, was they're like, "Hey, you see gold? Now look at silver. Better get the silver going." I'm like, "Hey, got me some of that right there." But
right.
yeah, I think it's interesting because AI could help you as far as like that. It's crazy because what happens is the AI is getting trained over, similar information. And so as they feel like, right, that they're gathering more positive reviews over whatever you're putting in and, however they use that information to also disperse to other users. It probably helps out a lot as far as like, hey, we have multiple users looking for gifts for their dad, right? We already got him power tools last year. We already got him, the new charcoal grill or the new wood propane grill or whatever it is, or we already got him this or that. Hey, you know what? Low key, let me get the NFL pass for next year or something. I'll take some college game day tickets too. How about that? Yeah, let's put that on the list. But
Come
yeah, I
on.
think I think there's a bunch of things I feel like that go into that, and I think it's a useful tool, but it could also be just like Googling. That's what I feel like AI is right now for most people, especially in that Gen Z millennial range. Is like um, being able to talk with Google instead of just being kind of like high basis because you can put more of a conversational prompt into those AI tools versus like going on Google and having to do more so of the deciphering yourself once you put in something kind of high level there. But going into our next one, holiday budgets still sit untouched. As of early November, an average of 64% of holiday budgets remain unspent. It's crazy. I think in that sense too. I feel like older people do their shopping all year round. Like I used to have that grandparent that's like, yeah, I wait until after the holidays over with because then everything's on sale and then I can stock. I remember walking into a closet one time and I was like, wait a minute, these are the gifts I just got like literally just a second ago. They've been sitting in this closet this whole time. She's like, yeah, like I really stock up on them, early on. I'm like, I guess that's smart because I mean just like anything, I feel like in that sense is like, once the holiday's over, especially holiday specific stuff, you can go ahead and rack up on it once the holiday's over and then kind of get in there. But it also kind of, I think, in itself kind of says that like people are waiting last minute. I think 64% of holiday budgets still being like left out there means people are like waiting up until, what, next Wednesday if stores are open. So,
Well, that's me. I'm this year, unfortunately. That's
yeah.
me, unfortunately, this year.
So that's gonna be me too, because I feel like I said, I'm like I don't know what else to get um, people. I feel like especially for my younger siblings, I kind of like give them stuff throughout the year, and so when it is time to like have a moment like the holidays or whatnot, to give them something I'm like, well, I've already got them this, and I already got them this throughout the year, so it's like, yeah, what else is there? Um, but yeah, I think it's highly interesting that that's the case that people are kind of low key waiting last minute to get everything else. Maybe they're expecting some deals. Maybe they're still, looking for something that they can, last minute gifts. So interesting though in that sense. Our next one we got here is Thanksgiving weekend, which is crazy because you have Black Friday and then you have Cyber Monday. Um, don't really know why there's two different holidays essentially for that. I remember one time I was talking to somebody who um, was not from the U.S. and they were like, "Oh, like is Black Friday a holiday? Like, are we, am I expected to be off?" And I'm like, "It's not a real holiday. Like, I don't understand. Like, But most of the times, like when you think about it, right? For school, for work and everything else, most of the time they give you that Wednesday, Thursday, Friday off. So it's like I can see why people might assume that it's a holiday, but in reality, it's not. They try to make it's really just a shopping holiday. So Cyber Monday is also interesting. But to go back into that, drew in a record of 203 million shoppers, spending about 11.8 billion on Black Friday, and then another projected 14.2 billion on that Monday. Think about those numbers, and then what we said at the beginning before we got to the fun facts, how much of that was on buy now, pay later. But I think it's interesting. That's a lot of money when you really think about it. Um, Also, in that sense, if it's been surveyed that people still have 64% of their holiday budget available, and Americans have already spent billions of dollars, just to think how much more money is going to be spent holiday shopping. Because I feel like that's a lot of times where people get a lot of their gifts is on Black Friday and everything else, because that's basically a month right before Christmas. So it's like the perfect time to, get everything that you need to, catch some deals. I will say one thing as a kid versus an adult, the deals that you get from Black Friday shopping are nowhere near what they were as a child. Used to have people like get into fights for that. It's crazy. And it's not even close. You go into the store on those days and nothing. Nothing. And that 10%, 5%, buy five, get one. It's like, where's the deals at? You should be able to get 30, 40, 50, almost walk out with something that's basically free. So, yeah, I feel like that's extremely interesting that Black Friday is like, I feel like it's lost its oomph. It's really just a day where people just go and spend their money for no deals, essentially. Cyber Monday, I think, is a little bit better, but again, online deals sometimes are not even as good as they used to be. So, Um, I think one of the funniest things is that I remember like people used to just get TVs. TVs used to be like the biggest thing when it came to Black Friday, and you'd walk out with like a 70-inch TV or like a 60-inch TV, and it'd be, they go for 800, $900 and be marked down to 150. Crazy deals. TVs are probably the only thing that I've seen that have gotten better and not have gotten more expensive. So um, that's probably like the only consumer product, but you can check my word on that. Go in, go look at how much TVs cost compared to how much they cost back then. You can use a little inflation there. And I guarantee it's probably not that much of a percentage change as far as like cost. But kind of going into our last piece here, traveling is obviously big during the holidays, especially around Christmas, Thanksgiving, New Year, even maybe. So, holiday travel intent is near all-time highs, yet wealthier households plan spending cuts. Ooh, wealthier households plan spending cuts across hotel and airline services. Looks like wealthier people are not traveling as much. Overall travel spending, lodging, flights is down from spring 2024, though cruise spending remains robust. So I have, you know what? Now that I'm older, I feel like I've heard a lot of people going on cruises a lot more. I have yet to be on a cruise. I've had a few family members go on a cruise already. I think it's highly interesting, like what they do. They were really, I think that was like one of the biggest things up there with airlines during the pandemic. They had a major drop. But yeah, cruises are interesting that people are spending more money on that. I think it probably is a little less expensive in that sense. And then if we look at just in the sense that like wealthier households um, are traveling less, maybe they know something that some of the other people don't as far as like that goes. But um, yeah, I feel like it comes down to one, how much traveling you're doing. If you did travel before, a lot of friends and family I know, right? If they seen everybody on Thanksgiving, they're like, okay, I didn't see there. Everybody got on my nerves already. There's no reason to do a round two. But yeah, it really just depends. I think most times, depending on how close you have intermediate family or whatever else, that's mostly like over Thanksgiving where you see a lot of your family members. I think a lot of people tend to spend those Christmas holidays with parents and grandparents, not necessarily all of your cousins and everything else. So, and usually people do rounds. It really just up to like, vicinity of family. But Tyler, I don't know if you have any thoughts on that and if you're planning on doing any travel. I know I am, but yeah.
Yeah, I'm not doing any travel, any big travel. At least I'm staying in this like within about 2 3 hours of where I live. Um, I do know like a cruise. Um, Man, people like cruises, I swear are cults. Like I'm not like people that love cruises and they like swear by it. I've been on one. I don't it was great. It wasn't bad at all. I'm not sure it's my first vacation choice, but anyway, yeah, I don't know. I'm curious though, like if like wealthier households are spending cuts around hotel and airline services, like I wonder what that is. Um, but also like if that if holiday travel is to hit all like near all-time highs, like who's making up for that gap, you know?
Mhm.
So I'm just curious.
Yeah. I think what you really want to do, and I think like especially the source that it comes from, um, is looking at, right, what does the company's bottom line look like, especially around that, I guess, money from, big travel holidays. So spring is obviously pretty big because you get a lot of spring breakers that travel. And then obviously around the holidays, winter, Thanksgiving, like we were saying earlier, they also have a lot of travel then. So I think if we pay close attention to that, and if that's also down, that also just speaks back into what we were speaking about earlier, which is the whole economic factors that go into that, why we've had the interest rates cuts, looking at inflation and looking at those other factors. Um, Obviously, people with in those type of households, right, have a little bit more knowledge on those factors, and so they probably have healthier spending habits. But there's a lot of assumptions that can be made just from that one piece alone, as far as like what the concern might be. But overall, yeah, it could be a number of factors as far as that goes. Cruises, I feel like you were saying, it's a cult thing. There's a lot of like retiring people that just do, cruise after cruise after cruise because whatever. But yeah, I don't know. Every time I've seen people on a cruise, it looks fun. Anybody I spoke to about cruises, they say it's fun or whatever. But yeah, I haven't been. For me, I don't know what the hype is. It's crazy that those ships, as big as they are, float on water. Like the engineers and everything behind that, it just astonished me. So I'm like, oh my gosh, like when you see one, like the thing is like if you haven't been on a cruise or you've ever seen like one of those up close, like if you see one up close, things are huge, huge, and some of them have like water slides on them and everything, and pools on them, right? They can have up to like 300 passengers on them. It's extremely crazy how those things go. So I don't really know how much money they make. So they're probably up, like I said, they're probably up there with airlines as far as like their revenue model. Um, but yeah, consumer. I think maybe the only thing that probably makes them better is that they are multi-day. You can buy packages with them, and a lot of it's just like all inclusive, whereas like a flight is like, one thing, right? 2 3 hours, or depending on how long you're traveling. So and those can be expensive. So I'm pretty sure if you two tickets, for a quick flight, round trip or whatever it is probably, your whole cost for a 3 to 4 day cruise. So that's probably why there's an uptick in that. But yeah, that's kind of all we have there for you guys. We'll love to know as far as like some of the holiday kind of trivia that we just had there. Interested in you guys, and if you have any opinions or thoughts on that as well. And then again, we've been talking about the Fed cut rates for a while now, what they kind of mean. So hopefully you get the idea, and also hopefully that gives you a lot of information as far as like what to look for or how to make general assumptions when the cuts do come. You can check out more about that on our channel. We've talked about a bunch of things too, as far as like consumer trends, inflation, everything that kind of was just discussed in some of our holiday facts there. Again, please let us know if there's anything else that you guys want us to talk about. And this will most likely be our last video of the year. So please give us new things to talk about as far as the new year goes. And don't forget to like, comment, and subscribe. And we'll see you all in the next year with ISO. and financial literacy. Thank you guys.